Hi friends, this is Dr. Maherji regarding our Unit 5. It is valuation methodologies in fundamental analysis. For this, some basic understandings about balance sheet or P&L account. These are the fundamental financial statements of any company. Today, the program is scheduled to have a better understanding about these statements and to have some common size and comparative financial statement analysis. Of course, in financial statement, one more statement is cash flow statement. So you are correct. There are three financial statements. One is to exhibit profit or loss for a period of time, that is P&L account. Another one is financial position as on a particular date, that is balance sheet, and how the funds flown inside or outside to the firm, that is financial transactions, what that are exhibiting all that in various terms of operating activity, financing activity, investing activity, that is cash flow statement. So P&L account, balance sheet, and cash flow statement. As you all knows, this financial statement, P&L account. Okay, how we are looking it into, that is revenues, how much the firm earned during a particular period, and how much of the expense it incurred for providing its services or the yeah. So revenues, how much it earned during a particular period, and cost of goods sold. So you see here on the screen, so revenues for a particular period, how much it earned and how much it incurred for expanding, for providing that products or services, that we called it as cost of goods sold. Okay, by deducting this cost of goods sold value from revenues, we will get gross profit. It is the relation between these things. And from gross profit, we will deduct operating expenses. By deducting these operating expenses from gross profit, we will get net profit. It is the relationship between these figures in any financial statement. So now we will see uh, by taking some practical exam or some financial figures. Okay, assume it is in between 2022 to 2023, two financial figures, years, and in 1 year revenues are 50,000. We are taking very simple figures for your better understanding, and another year it is 60,000. So for instance, cost of goods sold for this year, it is 30,000 and it is 40,000. And then operating expenses, they incurred during this year 15,000 and this year they incurred 20,000. Okay, these figures are available in any books of accounts. Thereby, the question arises, how much would be the gross profit and how much would be the net profit if these figures are like this in any two financial years. Yeah, you try to solve this. Okay, I'm taking, okay, anyhow, I'm using it in Excel. So 50,000, there will be minus this 30,000. I'm given formula. So 20,000. And then uh, we got gross profit and we know what is the operating expense. Again, I am giving this formula is equal to gross profit 20,000 minus operating expenses 15,000, 5,000. We got these figures. Okay, I will copy the same to that other one. Okay, anyhow, you all can say, okay, 60,000 minus 40,000, it is 20,000. And next step, net profit, gross profit 20,000 minus operating expense 20,000, it is 0. Okay, we came to know that uh, how to calculate uh, these figures. Okay, now we will see various items that are in balance sheet and what is the relation between these items. Okay, major when we see it in the balance sheet, asset side. Okay, we're more often looking this cash, accounts receivable, that means debtors, inventories, that is means stock in trade, we more often call it as. So by adding these cash or readily available and accounts receivable, we may quickly receive cash within months time, and inventory also we can convert it into cash by selling that, we get cash back. So all these were called together as current assets. And another, plant and machinery. Okay, here we call it as property, plant and equipment. So all we add. So if we subdivide them in different ways, okay, land and building, plant and machinery, furniture, electric equipment, etc., etc., we'll divide. So all these are uh, non-current assets. So by adding current assets and non-current assets, we will have total assets. So it is the relationship between these items. Okay, for instance, for again for 2022 and 2023, for 2 years, uh, we will take for 2 years we will take some figures for these items and we will see how they are interrelated. That interrelation, that is very simple. Okay, current assets plus non-current assets equal to total assets, that we are going to tell. It how they are in 2022 in one financial year and how they are changed to 2023 in another financial year. Okay, let us see. Uh, yeah, cash, I'm taking 10,000 here, cash 10,000, and in another year, okay, it is 15,000, and accounts receivable 15,000, and it would be 21,000, and inventory 8,000, and here it is 10,000, and property and equipment. Uh, so it is say 1 lakh, and in another year it is 1,50,000. These figures are available to us, and we have to find that missing figures. What that missing figures? Uh, there are this current assets, total current assets, and then total assets we have to find. This is simple logic. Simple. So, okay. How much it would be? Yeah, 10,000 plus 15,000, 25, 25 plus 8, 33,000 is the total current assets. 33,000 and 1 lakh non-current assets are, we call them as fixed assets. So 1 lakh 33,000. 1 lakh 33,000. And in another year, okay, you tell me, 15 plus 21 plus 10, 15 plus 10, 25, 25 plus 21, 46,000. So 46,000 plus 1 lakh 50,000, 1 lakh 96,000. Uh, to have better understanding about these relations between various items, okay, you have to examine various other items. You're looking into a practical financial statement of this balance sheet of any company of your own. Okay, where to get, you all knows. Okay, annual statement, annual report, call it or annual report of so and so company. You Google it and you get a annual report. From that, you can find this. Okay, now we will see the comparative or common size financial statement, how to create them, how to make them. So here you have balance sheet items, cash, accounts receivables, inventory. By adding these three items, we got total current assets, and then we added one item of non-current asset, that is fixed asset. Thereby, we get total asset. With this, we came to know the relationship between various items of balance sheet or P&L account. Now we will see this. Now we will see the common size financial statement, and later we will see comparative also. These two facilitates us to compare these statements very easily. Okay, let us see that. Yes. Okay, in common size, we make the total into 100. In terms of percentage, we will talk that values. Okay, let us see. In, in it as a percentage in terms of percentage. Okay, if this one is 100, so what it mean? Okay, in 22, in 22, 23, the figures I am taking it into 100. Okay, here what would be that formula is equal to how much it would be into 100 by this one. So this is equivalent to 7.51. I'm making adjustment to 2 digit. Okay, again you see the formula 10,000 into what, for your understanding, is equal to this one to this one by total. And again same 8,000 into this one by this one, and is equal to this one into this one. So this, yeah, we have given formula in this 10,000 into 100 by 1,33,000. So these three figures, cash it is 7.52% in total assets, whereas accounts receivable is 11.28 and the inventory is 6.02. Okay, this is total current assets. It is the summation of these three. Okay, and okay, I left over here, otherwise that will be added to the total assets. Okay, and then uh, that becomes redundant, but again it will take. So total fixed assets comes to 75.19. So these total assets are 100. In the same way, we will calculate for next year, that is 15,000 into 100 by that total asset value 1,96,000. So thereby it comes around 7.65. I'm giving the same formula for remaining all. It is redundant again. Okay, so 7.69. Okay, or else you put uh, two lines for this total. Total fixed assets are increased from 75 to 76 percentage, and whereas inventory is decreased from 6% to 5.1, and accounts receivable also decreased, only cash is increased slightly. That you have to write in your observation. So this is for comparative purpose. In these 2 years, 2022 to 2023, how these assets, various current assets and fixed assets, changed in between these two periods. So that is the purpose of this comparative uh, financial statements analysis. So 7.52 and 11.28, and then okay, yes, see these figures. Okay, here this calculation is also very easy. I'm again explaining. So C2, for which you make this grand total equal to 100, and then each item how much it would be if it is 100. So 10,000 into C2 into 100 by this 1,33,000. So for every cell we did like this: 15,000 into 100 by 1,33,000, 8,000 into 100 by 1,33,000. Like that we did. So it is the summation of these three. That's why I'm not calculating it again. So by adding all this, it comes to 100. Why? Because this 1,33,000 we equalize it to 100. In the same way, next year 1,96,000 we equalize it to 100. So thereby our comparison purpose becomes very easy now. So what I said, cash earlier year in total assets 7.52%. How much it is in 23? It is 7.65. This slight change increased. And whereas accounts receivable 11.28 in the total asset, but now it is 10.71 only. So it is slight decrease. In the same way, inventory also decreased, and fixed asset or this property, plant and equipment, this non-current asset, earlier 75.192, now 76.53. So it is increased. So this is the purpose of common size financial statement analysis, common size balance sheet we did now. Okay, now it is the turn to see this financial statement of P&L account. Okay, we will see how to calculate this common size P&L account for easy comparison purpose. Okay, here we have, yes, revenue, cost of goods sold, thereby we get a gross profit, and then by deducting it from this operating expenses, we will get uh, net profit. A typical P&L account will appear like this. Okay, let us see that. Okay, we'll take some figures here. Okay, revenue, it is 15,000, and in 23 it is 28,000. Cost of goods sold here it is 8,500. Thereby we will get a gross profit of 6,500. and then operating expenses are 4,000, assume. Thereby, we will get a net profit of 2,500. In the same way, in 2023, revenues are 28,000 and cost of goods sold is 14,000. So we will get a gross profit of 14,000. From this, operating expenses are 10,000. By deducting, we will get a net profit of 4,000. How to make it a common size? Okay, then okay, it is, we will make it percentage. Yeah, same. Mm, 20, 22 percentage and 20, 23 percentage. Okay. In case of balance sheet, we make total assets value equivalent to 100. But in this case, we will make revenues into 100. Total revenue is 100. Okay. Now, what would be the formula? So, is equal to this one into 100 by total revenue. By total revenue, that is 15,000. Okay, thereby 56.67 is this one. Then how much would be that gross profit? Okay, we'll copy this part. Yeah. In cost of goods sold is 56 and thereby gross profit comes down to 43% and operating expenses incur 26% and thereby net profit is 16.67%. In the same way, we will do it for year 2023 is equal to this one into 100 by what is the total value? Total revenue is here 28,000. Yeah, and 50%. And I'm copying all this. Okay, 50,000 is gross profit, 50% is gross profit, and operating expense 35%, and net profit is 14.29%. Okay, here you have to make some comparison. How do you make that comparison? Say for instance, here cost of goods sold is 56% in 22, whereas in 23 it come down to 50%. So thereby profitability would increase. And whereas operating expenses 26% in the year 22, but they are tremendously increased to 35.75. That is why this gross profit here, though it is very high in the 23, but net profit come down to 14.29, whereas here it is 16.67. Why this net profit is reduced around 2% here? Because of increase in the operating expenses. So this firm achieved some cost efficiency here at cost of goods sold at factory level. But at office and administrative expenses, these expenses are increased. So that's why this total profit was uh, reduced. So like that, you have to make a comparison between these two financial uh, figures, one to another. I hope you all understood. And in case of any doubts or clarification, feel free to call me. Thank you, Anand.